Our civic duty understanding taxes. Taxes are more than just a financial obligation, they are a cornerstone of our society. Taxes are financial contributions we make to the government. These contributions come in various forms, such as income tax, sales tax, and property tax. Each type of tax serves a specific purpose and helps fund different aspects of public life. We pay taxes on various things, our income, the things we buy, and even our property. Income tax is deducted from our earnings, sales tax is added to the price of goods and services, and property tax is based on the value of our homes and land. Think of taxes as membership fees for living in a civilized society. These fees ensure that we have access to essential services and infrastructure that improve our quality of life. These contributions are essential for the government to function properly. They enable the government to provide public services that we often take for granted, such as education, healthcare, and public safety. Without taxes, the government wouldn't have the resources to operate. Imagine a world without public schools, hospitals, or road. The absence of these services would significantly impact our daily lives and overall well-being. They fund essential services like healthcare, education, infrastructure, and national defense. Healthcare ensures we have access to medical treatment, education prepares the next generation, infrastructure connects our communities, and national defense keeps us safe. Taxes are the lifeblood of a nation, fueling its growth and prosperity. They support economic development by funding projects that create jobs and stimulate business activities. Understanding how taxes work is crucial for everyone, regardless of their income or financial situation. Being informed about taxes helps us manage our finances better and ensures we comply with legal requirements. It empowers us to make informed decisions about our money and contribute to the well-being of our communities. By understanding taxes, we can advocate for fair tax policies and ensure that our contributions are used effectively to benefit society as a whole. The importance of paying taxes. Paying taxes is not just a legal obligation, it is our moral duty as responsible citizens. Taxes are the foundation upon which our society is built. They enable the government to provide essential services that benefit us all. Imagine a country without well-maintained roads, quality schools, or accessible healthcare. Taxes make these public services possible. They ensure that everyone has access to basic necessities, regardless of their economic background. When we pay taxes, we contribute to the collective good. We invest in the future of our nation and create a more equitable society for all. Decoding tax brackets. How they work. Understanding the intricacies of tax brackets can seem daunting, but it's essential for managing your finances effectively. Tax brackets are income ranges that are taxed at different rates. Essentially, they are the foundation of a progressive tax system, which aims to ensure fairness by taxing higher incomes at higher rates. The more you earn, the higher the tax bracket you fall into. This means that as your income increases, the rate at which you're taxed also increases, but only on the portion of income that exceeds each threshold. However, it's important to note that you only pay the higher rate on the portion of your income that falls within that specific bracket. This is a common misconception. Many people think that moving into a higher tax bracket means all their income is taxed at the higher rate, but that's not the case. Let's say there are 3 tax brackets, 10% for income up to £20,000, 20% for income between £20,001 and £50,000, and 30% for income above £50,000. These brackets are designed to ensure that taxation is equitable and that those with higher incomes contribute a fairer share to public services and infrastructure. If your income is £60,000, you won't pay 30% on the entire amount. Instead, your tax is calculated progressively. You'll pay 10% on the first £20,000, which amounts to £2,000 in taxes, 20% on the next £30,000, which would be £6,000 in taxes, and 30% only on the remaining £10,000, resulting in £3,000 in taxes. So in total, you would pay £11,000 in taxes on a £60,000 income. This progressive tax system ensures that those who can afford to contribute more do so, while those with lower incomes pay a smaller percentage. This system is designed to reduce income inequality and provide necessary funds for public services such as healthcare, education, and infrastructure. For instance, a family earning a modest income will find that their tax burden is significantly lighter compared to a high-earning individual. This allows them to allocate more of their earnings towards essential expenses like housing, food, and education. On the other hand, higher earners, who have more disposable income, contribute a larger share, which helps fund the services that benefit everyone in society. The revenue generated from taxes is crucial for maintaining and improving public services. Schools, hospitals, roads, and other infrastructure projects rely heavily on tax money. By understanding how tax brackets work, you can better appreciate the role your contributions play in the broader community. Effective tax planning can also help you manage your finances more efficiently. By knowing which tax bracket you fall into, you can make informed decisions about investments, savings, and other financial strategies to minimize your tax liability. Additionally, understanding tax brackets can help you anticipate your tax refund or the amount you owe, allowing you to plan accordingly. This knowledge empowers you to take control of your financial future and make the most of your hard-earned money. In conclusion, tax brackets are a fundamental aspect of the tax system that ensures fairness and equity. By grasping how they work, you can navigate the complexities of taxation with confidence and contribute to the well-being of society as a whole. Section 4. Illustrating tax brackets with examples. Let's break down tax brackets further with some relatable examples. Understanding tax brackets can be a bit confusing, but with a few practical scenarios, it becomes much clearer. Imagine Sarah, a dedicated teacher who earns £35,000 per year. Sarah loves her job and is passionate about educating her students. However, like everyone else, she has to pay her taxes. She falls into the 20% tax bracket for income between £20,001 and £50,000. This means that not all of her income is taxed at the same rate. She'll pay 10% on the first £20,000 of her income, which comes to £2,000. This initial portion of her income is taxed at a lower rate, making it more manageable. On the remaining £15,000, she'll pay 20%, totaling £3,000. This higher rate applies only to the income above the initial threshold. Therefore, her total income tax liability would be £5,000. This is a combination of the taxes paid at both the 10% and 20% rates. Now, let's consider David, a doctor who earns £80,000 annually. David works long hours and has a significant income, which places him in a higher tax bracket. He falls into the highest tax bracket of 30% for income above £50,000. This means a larger portion of his income is taxed at a higher rate. He'll pay 10% on the first £20,000, which is £2,000. This is the same initial rate that applies to everyone, regardless of their total income. 20% on the next £30,000, which is £6,000. This middle portion of his income is taxed at a moderate rate, and 30% on the remaining £30,000, which is £9,000. This highest rate applies to the portion of his income that exceeds £50,000. His total income tax liability would be £17,000. This is the sum of the taxes paid at each of the three different rates. By breaking down the tax brackets and applying them to specific portions of income, we can see how the total tax liability is calculated. This method ensures that higher earners pay a proportionately higher amount of tax, while lower earners benefit from lower rates on their initial income. Understanding these examples helps demystify the tax system and shows how it applies to different income levels. Section 5. Smart strategies to reduce your tax burden. While paying taxes is crucial, there are legal ways to minimize your tax burden. One effective strategy is to maximize your contributions to tax-advantaged accounts, such as retirement savings plans. Contributions to these accounts are often tax-deductible, meaning you can reduce your taxable income by the amount you contribute. This can lead to significant tax savings over time. Another strategy is to take advantage of tax credits and deductions for which you qualify. For example, if you're a homeowner, you might be eligible for deductions on mortgage interest and property taxes. Section 6. Making informed tax decisions. It's essential to stay informed about tax laws and regulations as they can change periodically. Consult with a qualified tax advisor or use reputable online resources to understand the latest updates. Don't be afraid to ask for help if you're unsure about something related to taxes. There are numerous resources available to assist you, including free tax preparation services offered by community organizations. Remember, understanding your tax obligations and exploring legal ways to minimize your tax burden is not only financially savvy, but also empowers you to make the most of your hard-earned money. Section 7. Conclusion: navigating taxes with confidence. Taxes are an integral part of our financial lives. By understanding how taxes work, we can approach them with confidence and make informed decisions that benefit both ourselves and our communities. Remember to stay informed about tax laws, explore legal strategies to reduce your tax burden, and seek professional advice when needed. By taking a proactive approach to taxes, we can navigate the complexities of the tax system with greater ease and peace of mind.